as we know, historically, Black people have always gotten the short end of the stick. And in terms of a coalition building, we're usually the first ones to go, that they cut out, because we lack the, I guess, economic and political power necessary to really push our will forward, the way that we need to do. When I think about, I guess, this inequality issue, though, that's why I think it's even more important for us as a community to really focus on grassroots efforts in regards to organizing capital,
Right.
like what you're talking about with these investment clubs.
I
Go
also
ahead.
wanted to add, so I talked about it from a, community level, why we should do it. But as an individual, it also makes sense for individuals to join investment clubs to get access to those investment opportunities that they wouldn't be able to as individuals. And the benefit for you there is you get access to better deals, bigger deals, and that will help build wealth for you and your family more effectively than you could on your own, maybe just like investing in stocks or, smaller, you might buy a rental property here and there, but if you don't have access to capital to expand, you're going to be relegated to relatively, small investments. So by pooling our capital together, we can access bigger deals and more effectively build wealth as individuals and as a community.
Yeah, can you talk about that then in terms of why it's important to go after these bigger deals? Because I can see it from both perspectives, right? Where small
Well, bigger,
deals,
bigger and better. I say bigger and better because yeah.
yeah, well, small deals often provide a much higher return on investment, if you can, do those deals right. The problem is you can't deploy enough capital. You can't deploy enough capital to make it good for a long period of time, and those deals often run out of, I guess, juice, relatively quickly. I kind of look at it,
Yeah, it's harder to scale them and they're more risky. So, if
yeah,
you buy one property, if something happens to that one property, then you've lost. But if you have invested in 100 properties, if something happens to one of them or 10 of them, you'll still be fine.
So do you view that as a bigger deal, or consolidating like these much smaller deals into like a larger deal?
Both, and also diversifying. So, as an individual, say I have $100,000 to invest. As an individual, I could that's enough to get me a few properties. If I'm doing fix and flip, maybe get a few fixer uppers or one already renovated property. But if I go in on it with say 100 other people and put $1,000 in 100 different properties, now I'm more diversified. Still the same asset class, the same risk return, risk reward profiles, same opportunities to generate cash flow and capital gains, but I'm diversified across that asset class. So I'm not as worried about this one property as I would be if I was investing as an individual. So investment clubs help us diversify across asset classes and within asset classes as well.
Yeah, man. So
Yeah, one last point on the why as well, because I think I take this for granted, but a lot of people I don't think realize how wealth is built. So wealth is usually not built from income or even from having your own business and generating revenue from that, not the cash flow from it. So you can make a lot of money, you can do well for yourself just by having a business, earning money, or having a high paying job. But like generational wealth usually comes all at once in the form of a liquidity event. So say you do start a business, you grow it from one location to maybe 10 locations, and then you sell that business. So you're making, say your business is generating $500,000 a year, and that's really good money. But somebody comes along and offers you $50 million to buy that business from you. So you give up that constant cash flow for a liquidity event. You get a windfall of cash all at once. So that's how a lot of generational wealth is created. So what I would be focused on with what I'm personally focused on with my investment club is alternative investments that have the potential to provide those liquidity events. So we're not really focused on stocks or traditional investments. We're looking at more alternative investments, investing in startups, angel investing, investing in a wide range of real estate deals, real estate equity and debt, um, things that allow you to use leverage like commodities managed futures and things like that. But primarily, I'm going to be focused like the bulk of the portfolio will be in real estate and venture capital / private equity. That's where you
Well,
really those life-changing generational returns
I
that are
want to
hard to
push
do as
back.
individuals.
I want to push back or clarify then on that front, right? Um, we're talking about liquidity events, right? Which means selling your company at some point in time, right, to another
Or going
party.
public.
Yeah, or going public, but let's say even
Part of
just
the thing.
private, right? I mean, you got the Koch brothers, Charles Koch, who never went public with Koch Industries,
Right.
or other really large companies, or Berkshire Hathaway, who most of that's still private, from Warren Buffett, like those types of things, right?
Right.
Let's talk about that then, right? So on one hand, we're talking about like these liquidity events, but on the other hand, I know that you always talk about buying and holding in the Black community, and then Boyce talks about that too, and the importance of ownership and having control over the assets that we've built. So how do you reconcile those two different things when it comes to building wealth?
It's not an either or, it's both and. So let's say I have a business that I built over 50 years. I keep that business, but I've also invested in others. So I might invest in a couple of startups here and there, maybe even help build them while I still have my main business. And I've invested in other alternative assets, startups, other businesses that might provide me those liquidity events. Or maybe I sell a piece of my business. Say my business gets so huge and we've vertically integrated in so much, maybe I decide to sell off a piece of the business. So yeah, there are ways to do both. And also, eventually, I could sell a piece of my business to other Black people, so I can get liquidity from other Black people. So it remains Black owned, but me as an individual, I get a liquidity event for myself, and then I use that to invest in other things or start a new venture or retire or whatever I want to do with it. Yeah,
Got you.
I don't think
Yeah.
there's a,
So
I
so
don't
building
think
that internal economy as
they're not
well, where you can
mutually
sell
exclusive.
to it, where you can sell to another Black person, your company,
Right.
right? Okay.
And that well,
Yes.
and that's part of the reason why I want to organize these investment clubs. Because imagine if we have a network of, 100,000 Black investment clubs around the country, and we want to sell a business or start a business. Now we have access to a pool of capital that traditionally we wouldn't have been able to access because, as you know, it's hard for us to access traditional venture capital and private equity. Definitely, it's harder for us to access financing from banks and other larger financial institutions. So if we don't create our own pools of capital, it's going to be much harder for us to, access those deals and get those liquidity events and, fund the businesses to get them to the level that we to even be able to think about selling them.